G'day, buddy miners. We got some action in lithium M&A. Lithium is back. We're heading to bloody Brazil, and Brazil is not out of the question for an Axis mining technology piece of equipment to head to. Just because they're Australia, mate. They Brazil, North America. They will go anywhere to make sure you know exactly where those drill holes are going, AGC.
They're the Mr. 305 of the drilling world.
That is
Mr. Worldwide.
Trusted international drill advisor. Prestige worldwide, wide. Oh, love it. JD, how are you, Cobber? Bit of action today, mate.
I'm excited. No sort of scratching around post-quarterlies of things to read about, talk about, or whatever. We got plenty going on. Ali, you've gone deep as well.
Oh,
not
geez,
lithium related.
We're going to West Africa with
Everything starts with P.
Everything's P today. Pilbara, Perseus, Predictive.
Except
it's all
Latin.
happening except Latin. They get to miss out. But no, I'll be touching on the Perseus's strategic investment in Predictive as well later on.
Oh, good to have you back on the desk, GC.
Oh, back on the desk.
I've been talking to the desk a bit. I've got a bit of shit going on in behind closed doors on the desk. Anyway, we'll get...
You are the desk, Matty.
You are the desk.
I am the desk. Learn about algos. Mate, right, let's rip it. Pilbara Minerals, they've doing a deal. Latin Resources. GC, you're a ding.
I'm ding on Pilbara. Yep.
Long or
Alrighty.
short?
Long.
Oh, that's no good.
No shorts here.
Unlucky today, though.
Yeah.
Right, let's bloody... JD, you've done the legwork here, mate. Rip through the deal. What's going on? Who's who? Give it to me, baby.
All right, bit of a lay of the land for people that haven't been in as much of the weeds as we have. So obviously Pilbara Minerals buying Latin Resources, all-scrip deal, 0.07 Pilbara shares for each Latin Resource share. Now, it wasn't too far off the speculation we had just last week, guys, in that there was an all-scrip deal being readied by Pilbara. But, given the relative share price outperformance from Pilbara, that's not a massive surprise on anyone's sort of part. The deal values Latin Resources at 20 cents per share, or $560 million market cap, $540 million enterprise value, using a $2.85 Pilbara share price. So things have come off a little bit since then. The Pilbara share price is off 5% today. So, that value has come down a little bit. You can reword that in another sense and call it 6.4% of the combined entity is going to be given to Latin Resource shareholders. In other sort of ways of describing the deal, they've put it forward as a 57% premium to the 10-day VWAP or a 32% premium to the 30-day VWAP. So pretty straightforward scheme that we're talking about here. Needs standard approvals, as you see on the ASX for two ASX companies. Not as complex as we saw for the likes of Azure with that kind of dual track structure that was being operated to kind of fend off the likes of Gina or Chris or whoever might interlope in the deal. And the last bit, just on rounding out what the deal is all about, is the major shareholder and board have given their approval to the deal. That sort of speaks to 13% of the shares on issue at Latin. And you've got other instos there, including Regal, Waratah, and a couple of institutions out of Brazil.
Yeah, isn't it funny how simpler the deals are when there's not as much competition and the market's down?
Very astute, Matty.
Doesn't have to be as funky. JD, mate, this is the definition of counter-cyclical, and this is why it's so interesting. Give us mate, you're the lithium market expert.
I'm not so sure about that, mate, but we were chatting just yesterday and just sort of trading messages about the state of the lithium market. And obviously it's got everyone in the specific sector up in arms. And then, more broadly in the resource sector that everyone's got, eyes fixed on it and seeing where it's going. To pull out a couple prices, because it's still a very opaque market. And again, these can be just prices pulled off one or two contracts that have traded, or one contract and a couple people confirming. But Platts have said 6% spod is changing hands at US $770 a ton. Fast markets have said $800 a ton. That's for 6%. Remember, most of the people we talk about aren't even churning out 6% product. I've also seen hydroxide priced at under 11,000 US a ton, and carbonate at a bit over US 11,000 a ton. So the same kind of disclaimers go. It's an opaque market. Not much is trading hands. What we can sort of say is that we've heard a lot of people talking about inventory buildups that goes right the way through the supply chain. And of course, on the back of inventory buildups, you see the prices get whacked. We've seen the same thing happen with copper in the past few months. Supplies have increased right up as the demand from China has pulled off a bit, and prices just get whacked on the back of it.
Yeah, right. JD, tell us a bit about Latin. We haven't spoken about them for a while. We obviously did when it was friggin' lithium mania last year, but we better revisit it, mate. Lots happened since then. They've expanded a lot from where they were initially.
They put a study out sort of end of last year, something like that as well.
Yeah, preliminary economic assessment.
Yep, that's right. Year. September of 2023. I think we actually spoke about it at the time. So
who else would have spoke about it, JD? This is what we do, isn't it, Cobber?
The Mining News Centre. That's right. So to give people a bit of scope, we're talking about the Salinas project in Minas Gerais in Brazil. So as Pilbara are very keen to stress, that's a mining region, and it should be known to a few people out there, given there's ASX companies with interests out there, not to mention all the majors. You've got Vale and whatnot operating out there. The project itself, 78 million tonnes at 1.24%. Most of that, 70 million tonnes of that is at Colina, and the remainder sits sort of at another deposit 12 kilometres away. And of that 70 million tonnes, most of it sits in measured and indicated.
Very, very high percent measured and indicated, which is
yeah. So we saw a resource upgrade, to your point there, Matty, in May of this year, and the real change there was the increase in confidence. So you do more drilling, tighter spacing, and all that sort of stuff, and that lifted the confidence. That lifted the amount of tons that were in the measured and indicated categories up quite substantially. They did use a US $1,200 pit shell to sort of give them a bit of a guide and put it in a model. It's an open pit project that we're talking about. So kind of keep that one in mind as we run through the numbers, as you'll kind of get into as well, Matty, on the actual mechanics of the production and project that they've put forward.
So I guess the financial metrics, I'll give you a breather for a tick, JD. Suck a couple
Please.
in, mate.
Please do.
So MPV 3.6 bill at an 8% discount rate, 100% IRR, but that was using $1,700 US a ton spot. So obviously considerably below that now, but we're not mining it for fucking 4 years. So US $253 million capex, or US 300 mil if they were going to do phase 1 and 2 together. So and this is for DMS only. We'll get into that for this project, and we'll talk about the neighbouring projects that have had a bit of success with it. So
yeah, that's a great point, and that ties into a lot of the theories that people have out there as to why Pilbara might be going for this one. It is interesting to note on the MPV comment that you make there, Matty, one of the analysts, the Barrenjoey analyst, asked near the end of the call today about the sort of the financial metrics of the deal and it making sense and how they're paying for it and all this sort of stuff. And, he highlighted the fact that running through the spot prices gives you an NPV of less than 500 million. You're paying more than 500 million for the company right now. Obviously, there's a lot of caveats to that. They're paying in script and all these sorts of things. But it was just interesting to highlight the sensitivity of the project to the spot prices versus the future projections on the lithium prices. But I'm sure we'll get into that much more when we get into our thoughts on the deal itself.
Yeah, and they're not like the general, I think Dale said it, we're not mining this until the prices deem it fit to do so.
Exactly.
So, right, production side. So they were going for about 500,000 tonne of spod, 5.2%. So mostly a 5.5% product with a SC3 product as well. Whether they do like that SC3 if they sell it, or they just stockpile it and then put a float in later on, similar to what Greenbushes did.
I actually think it's a good point, Matty, you raised it. I actually think listening to the way they spoke about it on the call, they'll move away from this in time and they'll try and simplify it because, I think they'll just focus on that 5.5% product. And I think you've just got to take a lot from this PEA with a grain of salt, because a lot has kind of changed since then. And a lot of the rationale is Pilbara coming in and being able to use their core competencies to make the project better than the numbers that are highlighted in the initial study.
Yeah, yeah. So as you said, JD, big open pit, and high strip ratio, 18-1, because it's like really, it's all like stacked. You'll see it here. It's all these like sort of stacked lenses. It's not like a big bloody massive humdinger. But they're saying coarse grain spod, so DMS processing only. So,
yeah, I think that the geology is a great point, Matty, how it's kind of stacked. And there were a few questions again on the call in this one. You know, everyone can kind of see that, the analysts can see that, and they're a bit alarmed by it, especially when you throw around terms like tier one. That has got to be the most overused term in mining. Everyone knows it, but it still happens anyway. Analysts were quite critical of how it all hangs together. And, you know, that this wasn't exactly highlighted in the presentation, no surprise, but there wasn't cross sections like that in the slide deck today. But, you know, Latin aren't hiding it. You can see it in the resource upgrade that came out in May. We'll chuck up a couple images so you can see now. And obviously we're not geologists, but it's pretty clear that that is harder to mine. You said, Matty, an 18-1 strip ratio there. Again, they said on the call they're going to try and pull that down. They think that, you know, they're confident that they can pull that down. They've remodeled it with the updated numbers because the preliminary economic study only used the initial resource. So that's only 30 odd million tons. That's much smaller. They've done a lot more work, a lot more drilling since then. So things are already looking quite different. I'd also give Pilbara a bit of the benefit of the doubt here, given that they've got a lot of experience with this. You know, there are similarities to the ore body that they have at Pilgangoora. They've also integrated ore sorting. They've commissioned that at Pilgangoora, and you know, that they have spoken to there being less concerns around the host rock. It's not as problematic as we might see at other operations out there. But, you know, it is a challenge that they're going to have to overcome. And, you know, one more thing working in their favour, we spoke about with another project earlier in the week, but they have cheap hydropower here. So it makes processing just a little bit cheaper, given that your comminution circuit, the energy going in is one of the biggest costs when it comes to processing. If you're getting, you know, if you're paying 4 or 5 cents a kilowatt there, then, you know, the costs are a lot more friendly than they might be in other parts of the world.
Yeah, well, we've seen it with our own eyes at Pilgangoora, like the internal dikes within the spodumene ore body. Like it's something, this sort of stuff is what Pilbara have always dealt with essentially. Now the ore sorting's come in, which is, I'm not too up on it, but I assume the more you do something, the better more reliable it becomes. So... Yeah, and that's what'll need to be used here. You just got to have shitload of geos marking the shit up in the pit.
Probably the other important thing as well is, you know, this is obviously still all at a PEA stage, right?
Yeah.
And you know, the project's changed a fair bit. The lithium market's changed a bit since all of this was put out. But it'd be very interesting to see what assuming this all does go ahead, what a Pilbara branded feasibility study would look like on this.
Yeah, no, I've heard water mightn't be as simple as it seems over there.
Yeah, that's another point to look at. The comments in the initial study, I went back and had a read. They were fairly muted on that, Matty. They spoke about pipe and water from 2 dams in the area. They also spoke about having a water recycling plant as part of the study. Off the top of my head, that was going to cost them 30 or 40 million bucks. So they talk about that from an ESG lens, but you could be a bit cynical and say they need the water.
Yeah,
exactly. Yeah. So the other big point I think we have to talk about is the permitting timelines, and you know, not just as it's applicable to Latin and the project here, but what the read through is on the permitting timelines of projects around the world. So we'll flash up the slide that we were chatting about internally earlier, and you can see that these guys mark this as attractive as it comes in terms of the speed to permitting. They use the example of Sigma Lithium, and that went in roughly sort of 4 or so years from the first permitting. I think they had 16 months in construction.
Yeah, I'll bring up the timeline off Sigma's website. So like DFS in 2019. And I think started construction 21, finished commissioning Q1 23, and achieved commercial production April 2023. So that's like
That's amazing.
From DFS to, and they're in at nameplate now. I think they pumped out. So they were predicting about, I think it was 270,000 tonne of spod per annum for stage one. They pumped out 53,000 in Q1 this year. So again, they're DMS only. So like when you ask about like, and that's the whole thing is like, is this DMS only a reliable processing option, and where has it been? Because we saw what happened at like Core Lithium. Obviously Mount Catlin, when they were going through the fines, had really shit house recoveries. Mount Marion, that's effectively DMS only because the float's there, but I don't think they use it. Pardon me. So you look at, I think Sigma's the poster child for DMS only. And they, from what I've heard, like I don't think they disclose it, but one analyst says they get around 65% recovery, DMS only, and then obviously have fines coming out as well. I'm not sure if they sell the SC3 or not. But if you look, if you can get, I think effectively, if you can get 60s for DMS only, look at, because Pilbara got 72% last quarter, but the quarter before that they got 65% recovery, and that's with flotation and everything. So, and we all know how long it took to ramp up the flotation, the extra capex. So Sigma's DMS only option, which was 2 years from construction to bloody commercial production, you'd take 60%, mid-60s recovery any day of the week. Like if you can maintain them consistently through the life of mine for the less capex. So compared to putting a bloody flotation in, fucking around with it for a year or two, and just to maybe get another 5% recovery, maybe 10%.
And the speed to market as well.
Oh yeah. So this, if Sigma's operation to go by, which is friggin' 100 k's down the road, it's probably looking like that's the way it's going to go.
Yeah, I think it's a good point, Matty. And you can see in the study, they modelled in for the 5.5% grade product, 67%. So they're aiming for in and around the area you said. On the point of permitting, it's super interesting, the speed at which they were able to go from permitting all the way through to actually producing product. I think, it'd be awesome if the Western world, not that, Brazil isn't a developed country, but places like Canada and places like Australia could learn a thing or two about a project like Sigma, which is not a tiny project, it's decent scale project. If they could learn a thing or two about how we can get our projects online just a little bit quicker in, the same kind of responsible way.
I think like North America, it's whether the regulatory agencies want to get it online quicker, it's up to the Cree, like the natives, like they're the people that are trying to, you got to convince to be pro mining, which is.
Yeah, you need buy-in on a lot of parts. It's
very delicate. Yeah, take phones away from everyone, they'll start bloody thinking differently. It's like you're grounded. Yeah, you lost your phone for a week. Bit of parenting there. Right, what do we think of the deal? There's plenty of varying opinions going around.
There are, mate. There are quite a few different opinions. I mean, like anecdotally, I'm not sure about you guys. I've probably heard a few more negative comments than I have positive.
Same.
I mean,
I heard more negative this morning. They've become more positive through the day.
People have like digested it.
Yeah, they're like, oh, yeah, maybe. Yeah.
I mean, what I'd kind of say is, first of all, you can't slag them for being pro-cyclical. So I think it's pretty awesome, and it's pretty rare as well that we talk about counter-cyclical deals. So that's a pretty awesome thing. And
definitely
to all the
complete
people,
polar opposite of Xstrata buying Jubilee and the nickel market crashing a week later.
Polar opposite. Unfortunately,
polar
we could
opposite
make
of Gina buying Azure.
Again, true. Yeah. And I mean, there are people, still slagging them about the timing. And I just kind of, go back to those people and say, nobody knows when lithium's going to turn around. People were saying it's going to be up, in at least, over 1,500 for years and years and years to come. And now people are saying it's going to be below 500 or 600 or whatever, 700 for the rest of the decade as well. So, you take all these things with a grain of salt because it's super, super hard to predict where commodity prices are going. But they're roundabout in the right sort of ballpark of doing a deal at a time when the commodity price is down over 90%.
Well, remember when it shit itself at the start of the year, JD, and like talking to everyone on the desk and everything. The consensus was it could be 6 to 18 months before it sort of all stabilises and inventories drop and we might see something again. And we're effectively only 6 and a bit months into that.
Yeah, that's right.
Since it was the highs. So like it's still
bit to go.
Still a bit to go. It could turn around soon. It could be still more to go. But as I said, it's fucking significantly, these equities are significantly cheaper than they were friggin' 6 to 9 months ago.
Yeah.
Yeah.
Sorry, I was just going to say one thing to add to your point earlier, JD, is I think people forget that, Pilbara aren't doing some sort of merger of equals here where they're diluting, a shit ton of their capital to get this asset. It's barely 7% of the enlarged group, right? And it's it's a call option on when things do get better. It adds what was it? Something like 30% to their production profile.
Or potentially 50% at a P1000, right?
Right.
Yeah.
So, if I'm an investor, which I am, I'd rather them do a deal now and have the call option and exercise that when they're ready, the market's ready, etc., rather than buy something at the top of the market at, something equivalent to their market cap and then the lithium price, crumbles and this, that and the other. So obviously it's not as simple as that, but that's just one view purely from a call option or shares on issue dilution perspective.
And look, if you're a Latin shareholder, like you wouldn't think so. This scheme's going to go, if it goes through, it'll go through by late November, early December. Like if you're holding Latin shares at bloody in the low teens, like would you expect the lithium market to recover 55% by November, December? Probably a bit of a bloody bet. I think friggin', rate things are going, possibly not likely, could happen, but you'd be taking the Pilbara paper right now, and that gives the funding solution to develop Salinas. So you're not like there's no big debt, no big cap raise needed. You're getting a 55% premium. You're not getting diluted anymore, and yeah, so it's I think it's a good deal for the Latin shareholders at the time of the market right now.
I think you're spot on with I think 20 million in cash when I last looked from the latest quarterly. You sure as bet before the end of the year they would have been diluting again. Back on Pilbara to round out the thoughts on the deal there. One of the knocks that is pretty genuine is that they're obviously now no longer a pure play WA producer. They're exposed to a different part of the world, assuming the deal goes through, and maybe that does cost them a bit of their premium valuation. People mark it down slightly because it's Brazil. There's been a few companies that have gone over there and they've struggled a bit. It's not everyone's kind of cup of tea. So that one does hold a bit of weight to it. And interesting to hear on the call that Dale was not really eager to talk down any further inorganic growth. He wasn't out and out saying, no, we're not doing any more M&A. So it was just interesting the wording on that front.
Yeah, I think it's because it's early. So as you said, they're not really going. It's not like they're going friggin' balls deep into it right now, right where bloody
exactly
we're going to start building, we're going to start doing this. Because obviously when that happens, like with a different time zone, like you need extra teams. It's a lot of extra work to like start working in two jurisdictions. But I don't think they're going to be pulling the trigger too quickly. It doesn't sound like they'll can do much for 2 years, to be honest, in terms of progressing it towards being built until they were confident of a price recovery. So
yeah, like we said before the call, it was initially flagged to be producing by 2026. That's just not going to happen. That was also kind of factored into brokers' models that this would kind of come online. So, one other way of looking at it is that there's sort of supply coming out of the market or expected supply coming out of the market. They were very firm in saying that they're going to bring this one online when the time is right, when the market can absorb the tons that they're going to produce. And yeah, you're going to get people marking down the value of this in the portfolio of, projects and assets that Pilbara have. That was going to be the case if they took on any undeveloped deal. Yes, there's going to be a fair bit of CapEx that needs to be spent down the road, but at least that's in the hands of Pilbara now, right? They can hopefully get the permitting done much sooner than they would in other jurisdictions, and they can choose when they can go forward with it, as opposed to being handcuffed until 28, 29, 30 because of whoever, Maddie, like you kind of say, whether that's the government or other sort of shackles that you have in getting the project online.
And it's being given to them resource ready, like a shitload of drilling's been put into this, hence why the measured and indicated level of the resource, like probably too late to now because it's been so much drilling done to do like a drill for equity arrangement with K-Drill, but probably could have saved a bit of capital previously if they did go down that road. Look, doesn't really matter now because they're getting bored anyway. So, GC, it doesn't mean any other mining companies out there in the goldfields can't like get in early now and give old Drew Harvey a call to maybe talk about, you know, bit of exploration drilling, maybe drill for equity, AJD.
Bang on, mate. These guys are going to have to do a bit more, you know. I mean, there's plenty of companies out there, but you want to turn this all into a reserve one day. Yeah, K-Drew is the team you want.
Well, and look, because it's a pretty simple process. Like you know, Druba's numbers in the show notes. You give him a ring, he'll pop down, come have a couple of pints, talk some drilling, talk opportunities. Before you know it, you'll have a mineral resource filled with RC and diamond holes, bloody of the highest standard. All on the back of having a pint with Druba.
Go Druba.
And a great mate.
Oh, just a mate. He's a friend for life, that fella. Go
That's
Druba.
right.
JD, what about Sigma? So we talked about Sigma, I guess you'd say the OG lithium producer in Brazil.
Yeah, Sigma's an interesting one, right? Because they've been kind of shopping themselves with a for sale sign hanging out the front for a while. It was, you know, very explicit in how they were kind of promoting it for a while. It hasn't happened yet. Obviously, the stock's come off quite a bit, like it has with every other lithium stock out there. But I mean, you took a dive into what they're actually churning out at Sigma there. Why don't you run through that and then we can kind of cover if there is something down the track with projects tying up together.
Yeah, and like that, and that's, I guess, the comment going around is like, right, is this a bit of a stepping stone to a bit of further consolidation in Brazil? Like, look, Sigma, they're looking to expand. I said they're about 250,000 tonne per annum at the moment, or 270, I think it was, looking to expand for phase 2 and 3 up to 766,000 tonne of spod per annum. So, so, and then you got Selena's PEA forecasts, like, you know, 400,000 to 500,000 tonne of spod. So combine that one day with Sigma, like there's potentially over 1 million tonne of spod coming out of those two projects in Brazil, in addition to Pilbara potentially expanding to 2 million tonne in probably the far future, beyond the P1000 level. So, mate, that would be the biggest fucking spod producer in the world. That's like shit.
Wow.
Like, if all that pieced together, if that's like the long-term plan, that's becoming, yeah. It's whether they're doing this to like think, right, either we do something now so we don't get bought by a Rio or something, we have to get bigger to make ourselves bigger and more defensible.
Yeah, I mean, it's a super interesting point you raised, Matty, the idea of expanding Pilbara and whether that is actually what they should have prioritised. I'm sure that's what a few people are asking at the moment. So obviously they chucked out the study for P2000 not too long ago. That had a capex of 1.2 billion. As we kind of ran through, there was hundreds of millions of dollars that were not included in that 1.2 billion. So it was, you know, very capital intensive. Obviously, you're adding a lot of tons, but it didn't receive the warmest reception from the market at time, just sheerly because of that price tag and because of the fact that they were talking about expanding again in an oversupplied market. Now you have to think they've obviously compared the two here. And if you look at it kind of crudely, we're talking about 500 million Aussie to buy Latin, add in, call it another 500 million in capex, half cash, half paper, and you're potentially getting 500,000 tonnes per annum at 5.2% down the track, you know, all up $1 billion. It does on those kind of metrics again, very, very kind of rough, and timelines are a bit different and all these sorts of things. But one does look a bit more appealing than the other.
Yeah, and this is probably like the smaller bite that they've taken here, I think was probably the lowest risk option for them, so the market didn't burn them for so-called bad M&A. Like, it's not, I don't think you can ever call counter-cyclical M&A bad M&A. Bad M&A is the Jubilee example that we gave before, like buying something at the top of the market. Like, but
sure.
you know, that's what the high short interest was in place, likely for, you know, the natural lithium hedge, but also the potential they were going to do a deal, and they have. Yeah. But it's not, as I said, 6 and a bit % shares on issue. It's not fucking.
Yeah, it wasn't a swoop at Arcadium or something.
No,
yeah.
In saying that, it was. I think people were still sort of surprised, like, oh, Latin. Like, they're thinking, oh, why not a PMET or something like that. But I mean, we'll probably go through that in a bit more detail now, as far as or even like a Liontown or Wildcat or something, but which are bigger, but. Each of them have got their own sort of things to look at as well, which, on paper might look more interesting, but as far as ability to execute is a bit of a different story.
Well, like Wildcat's probably, you got, MinRes sitting there with 20%, so that's just difficulty straight away. Liontown, you got Gina sitting there, so that's difficulty.
And PMET, you got Trudeau sitting there.
Oh, big Trudes. Well, yeah, PMET's that's the interesting one, because everyone's like, oh, Pilbara should buy PMET or Pilbara should do this, like, buddy. But if you look at, let's weigh them up together, Latin versus PMET. PMET's market caps currently sits a bit below 700 mil Aussie, was friggin' 2.5 billion, so that's how much that one's come off. Wow. So similar premium to this, that's like a, 1.2 billion dollar deal. Probably, if you look at the ore bodies, probably a lot more lithium at Shakachuiwana. Is that how you bloody pronounce it?
Well, you gave it a crack, Matty. That's the main thing.
Shakachuiwana, and a lot thicker. Like, you'd take the ore body over the Latin one, but as you said, look at Sigma's timeline, DFS to commercial production, 4 years. So getting a bit of a foothold in Brazil, which is just is such a lower barrier to entry to get a project permitted and built compared to Quebec. That's just unfortunately how it is. And for what they're going to spend on it and the amount of spod to come out of Salinas, if it's delayed a bit and it's not going to be that hugely impactful on Pilbara Minerals, I don't think, like 400,000 or 500,000 tonne. Say it's not going well and it's like 100,000 tonne less. They're already going to be producing 1 million out of Pilgangoora, so it's not like a massive material bloody impact if it doesn't ramp up. So it's just like combining all that, it's such a lower risk option, but then gives them the opportunity to potentially inorganically grow with Sigma as well. And I think that's just the bet they're making. They're betting on Brazil versus Quebec.
Yeah, I think that's a good analysis to kind of make those permitting timelines just really, really stand out.
And who knows if PMET would have actually done a deal with them at this stage. So look, ex-Pilbara Minerals, Ken Brisden, he's just moved over to Quebec because he came on as PMET top dog start of the year. So if you look at his actual bloody, if I'm running a bloody mining company, I'm thinking about, right, how do I make money out of this? Yep. It's pretty bloody
Get
natural.
Myself set.
That's what I'd be doing. So
got a couple oppies to reprice.
If there's a change of control, he pockets 2 years' salary, so that's about $1 million, plus another up to $1 million for the short-term incentive bonus, so 2 years' worth. So you wouldn't sneeze at $2 million, but his real money is in his options. So he's got 450,000 oppies at $9.78, so they're well out of the money. Their share price is $4.43, and then there's another 450,000. I think they're priced about $7. It was based on the price of when he came in, so I think they're about $7. So even a 60% odd premium at today's PMET price on top of what it is, like, they might be just in the money, but he wouldn't make much out of it. So his incentive is to wait for a lithium turnaround and probably in the meantime keep drilling, progress the bloody traditional owner relationships and the permitting and all that side of things, unless there's a freaking turnaround and a huge offer that comes their way. So I couldn't see him doing a deal with Pilbara at the moment anyway. So they might have asked and he said, no, all good, mate. Cheers.
Yeah, I think you're spot on in your comments there, Matty. When you compare all the options out there, taking in everything into account, it kind of makes a lot more sense that Latin's the one they went for. Obviously, it was unexpected to me and a few others, though.
What do you think about all-scrip, JD, when they got shitload of cash there already?
It just makes sense, I think. Look at the relative outperformance with Pilbara and every other company out there. It just makes perfect sense. The cash is precious when you're in a cyclical market and you're in a downturn. You don't want to waste that. So I think that's very much the right decision.
Yeah, and just because Pilbara's share price down, as you said, relatively it is done a lot better than everyone else's. So you could say technically their scrip is still overvalued in a lithium market. So, yeah, if you get it over.
It's all relative, hey?
All relative. Bloody, mate.
I think that's it.
Well,
I think we've covered.
Fuck, we've bloody that's everything you need to know, I reckon.
There were a few other comments, on the call and in the presentations and stuff about sort of diversifying themselves geographically, being able to sell into other markets, perhaps less mature markets in Europe and the US. That's a bit of a tweaking of the style. Obviously they've got offtake that goes to Asia right now. That all changes. Yeah, I think that's kind of interesting, but I think we've covered most of the kind of key details behind the deal there.
Yeah, no, good stuff. Good stuff. I like it. I like it.
Go to Africa now, mate.
Finally, we've always been saying, fuck, when everything's cheap, when's people going to do deals? And
it's happening.
Pilbara have had frigging cash for ages, even though they haven't used any of it for this. But I reckon it's been a pretty disciplined approach. So
yeah, interesting to see the market's reaction.
Unless spot goes to $200 a ton. But let's
for now it is.
Not go the mining industry.
They're all buggered anyway if that happens, mate. So you might as well go out swinging.
Yeah, exactly. Right, GC, onto the P's.
Onto the P's, Perseus and Predictive. So we saw aftermarket yesterday. Perseus made a strategic investment, let's put the inverted commas around that, quotation marks rather, in Predictive Discovery. Apparently, already what this happened.
So
Matty.
word on the decline actually, and I think this is, I don't know if you knew this. So
tell us
what sort of sparked this investment was that I think Perseus got wind that MMS were being looked at to go actually do the mining services contract in Guinea for Predictive.
Heading to Guinea.
Yeah, so they've thought, fuck, we better pounce on this before this thing runs away. Because, mate, once the desk gets rolling, mate, she can just go.
The power of the desk,
Oh,
Matty.
mate, the algos just start, the thing's just, it's like a tornado. So, mate, because it was probably on the back of what MMS have done for Black Cat at that Myri project. Have a look at this. First ore delivered 2 months ahead of schedule. Look at the fucking dirt flying into those trucks.
Jeez, you don't see that often. It's normally, 10 months behind schedule.
Mate, if all the bloody analysts listening, mate, you chuck that in your model, pull the first production forward 2 months in your cash flow, time value of money, that is worth millions in the future. Chuck it the discount rate, freaking unbelievable. So pretty much if you want to get your first ore at least 2 months ahead of schedule, MMS are the team to do it. So
MMS.
And look
That's
at
awesome.
and it's materially converted into a investment in Predictive by Perseus. So
there you go.
Are you going to go into the first thing we saw about this Perseus Predictive thing?
I'm going to save that fun fact for right at the end.
That fun fact, the one on the iris screen.
Oh no, that one's coming very
That's in?
soon. Yeah, that's in.
I'm looking forward to that one.
So first, let's set the scene, right? So for those who don't know, Perseus, they're a roughly $3.5 billion market cap Aussie-listed African gold producer. They produce over 500,000 ounces a year between 3 mines, Edikan in Ghana, Yaouré in Côte d'Ivoire and Sisingwe in Côte d'Ivoire as well. So here's a map of where they all are. They also have the Maya Sand Gold Project, which was previously known as Block 14 in Sudan, when they acquired Orca Gold back in 2022. Unfortunately, there was a big outbreak of hostilities in Sudan last year, which has been a pretty big setback for the project there. So Perseus have sort of deferred FID until the situation sort of settles down there. So they're just at the moment doing some very low-level drilling and study sort of activities there. More recently, though, they've been in the press for acquiring OreCorp for about US $150 million. And they have the Nyanzaga asset in Tanzania, and they did that deal earlier this year, and that was a bit of a competitive process.
Oh, the Battle of Nyanzaga.
The Battle of Nyanzaga.
With Silvercorp. How good was it?
Yeah, so good times. So that's got a 2.6 million ounce ore reserves, around 2 grams. All the key licenses are granted. They did a DFS a couple years ago showing a production profile of about 234,000 ounces per annum over 10 years. That's a bit of open pit and underground. And at the time, this was at a gold price of US $1,750 an ounce. It had a post-tax NPV 5 of US $618 million and a capex of US $474 million. Now, just pop that in the back of your mind for later.
Yeah, so a bit over 1-to-1.
Yeah, a bit over 1-to-1, which again for a single asset company is and if your market cap's a lot less than the capex, can create a bit of difficulty there trying to get funding.
I can see you're building up a narrative here.
I'm building up the narrative.
Oh,
we're going
like
on a journey, Matthew.
I like it.
So there's an updated feasibility study being prepared by now the Perseus team who own Nyanzaga, expected later this year, doing a lot more drilling, feed studies, all of that. FID is expected at the end of the year and targeting first gold in early 2027. There's also the CMA underground. They've got at Yaouré, which is a key growth project for them. They're starting a portal sort of mid-next year with first production anticipated mid-2026.
First ever underground mine in Côte d'Ivoire, that one.
Is that really?
That was from our episode the other week. They have to Perseus are helping Côte d'Ivoire develop the regulatory framework around underground mining because it's never been done.
Good on you. Good on you, Perseus.
Go Perseus. Go Australia. Go Côte d'Ivoire.
Go West Africa. So, and stepping back on more the corporate level, Perseus made almost US $500 million in cash flow in the last financial year, and they've got a history of achieving or exceeding guidance since 2020, so the last 4 years. And they've got US $587 million in cash and bullion and no debt. And I mean, look at this graph here, right? This shows their sort of production profile over the last 4 years and their realised gold price and all-in sustaining. And that margin between the gold price and the all-in sustaining has just continued to grow. And, we all know, we've talked about it quite extensively, the cost inflation environment we've been in recently. And it has ticked up a little bit, but, relative to the gold price, that's super impressive. So now let's move on to Predictive. They're about a $500 million market cap company, listed on ASX as well, and they're a West African gold developer. And their main asset is the Bankan Gold Project in Guinea. So they've got 85% of that, and Guinea have got the balance of that asset. So they actually put out a maiden mineral resource on that only 3 years ago of 3.65 million ounces. Today, that resource stands at just shy of 5.4 million ounces, of which 77% is indicated. And they also put a maiden ore reserve out earlier this year as well of just over 3 million ounces, mostly open pit, but some underground as well. They put the PFS out on Bankan earlier this year in April, which outlined a 12-year mine life, almost 270,000 ounces a year at 1.8 grams per tonne of gold. To give some context, this is about 30,000 ounces per annum more than Nyanzaga, which Perseus just acquired, and 50,000 ounces per annum more than WAF's Kiaka, which is currently in construction and development. So this PFS showed of an MPV5, which I hate an MPV5, but let's just roll with it.
In West
You're talking
Africa.
about
In West Africa.
in Guinea. It's all
in
good.
Guinea.
West Africa in a high interest rate environment.
Anyway, I'll just get too upset. That's at spot. 2,300 US gold price is US 1.4 billion. CapEx of US $456 million, and that's for a 5.5 million tonne per annum plant. Now, they say in their presentation, it's a really low capital intensity per ounce, but I think the better measure is NPV to CapEx ratio. I'm very much a firm believer it's always margin over ounces. Doesn't matter how much you're doing, as long as you're making money off them. That's all people care about.
Unless you're BHP and Rio, they don't.
They
love 10% IRRs.
Oh, no, it's stunning. So if you do an NPV CapEx ratio, this is, mind you, at spot, it's around a 3 times ratio. So 456 million US CapEx is currently a fair bit more than the predictive market cap. So again, this is a little bit analogous to OreCorp Nyanzaga when they put their study out a couple of years ago. Obviously, there's still a lot more work to do on that, to optimise it, convert more of that inventory from resource into reserve, leveraging some of the grid power in Guinea, which they reckon could save another US $100 an ounce on their sustaining.
What's the timeline they have on, the next 3 or 4 steps?
Yeah, so the timeline is second half of this year, they're expecting their sort of approvals of their exploitation permit, which was essentially like a mining permit. Then a DFS sort of the year after, construction in sort of 27, and then production in 28. But arguably the most important thing for Predictive now is securing this exploitation or mining permit, given the asset's location in what's called a peripheral zone of the Upper Niger National Park. So have a look at this map here.
So it's a real grey area jobby, isn't it? It's right on this fringe.
Literally right on the fringe, right?
Which just makes it it'd be just annoying.
Yeah, so I mean, look, it's you can see in the top right-hand corner there where Northeast Bankan and Bankan Central are. So they're on that right sort of peripheral area there. Predictive actually put a bit of a detailed announcement out on this back in 2021, but essentially that peripheral zone, mining of mineral deposits is not permitted at this stage. However, there are precedents in Guinea for mining permits to be granted in environmentally sensitive areas. The submission of the PFS early this year, and they also submitted their what's called an environmental and social impact assessment to the Guinea government, is a really important part of securing this permit, which, as we sort of said earlier, we're anticipating sometime in the second half of this year.
Yeah, right. So they're obviously not taking a full swing at them, but they want to be in the game. They got their foot on the throat now.
100%. So now, if we're taking that context into what was announced the other day, so Perseus appeared to have taken a bit of a leaf out of the Ramelius playbook with a 13.8% strategic investment in Predictive. So they acquired about 325 million shares at 21 cents per share from JB Boyton and other entities linked to the investor and the driller, roughly about a $68 million Australian outlay for Perseus. Perseus also have an additional almost 3.5% economic interest, or about 81 million shares in Predictive, by way of cash-settled equity swaps, which brings their sort of total interest, if you want to call it, to just over 17% if you include the swaps.
I've got a question.
Yes.
What the fuck is a cash-settled equity swap, GC?
I feel like this is that moment in The Big Short where they pan to someone else to explain a really complicated finance term.
Where's Margot Robbie?
Where's Margot Robbie? Oh, geez. So I actually had to find a friend on this one because it is a bit of a complex one to explain simply. So essentially what it is an investment bank, like a Citibank or a Barrenjoey or JP Morgan or whatever, holds the shares on their own account and has legal title to these shares on behalf of a client who has a contract with the bank to essentially get economic exposure to the shares without physically holding them. The client, so in this case, Perseus will say, hey, here's, IB over here, here's cash, can you, and here's an agreement. I want, so many PDI shares. The bank acquires them and holds them on the bank's account, and Perseus has that economic exposure to those PDI shares. So the voting rights of those shares actually sit with the IB, but there's typically, when I saying IB, I'm referring to investment bank, but typically there's some sort of arrangement where the bank would sort of just, abstain from voting or just vote with whatever the proxy says and things like that.
So I think it's the way, and I think we talked about it in the Ramelius Spartan thing when they were trying to figure out where all those bloody shares went. So they can effectively hold 9.9% of a company without being touted as notified to be a substantial shareholder, because they can have 4.9 and a bit in their own name and not be as substantial. Then they can have, say, 4.9% on swap.
With
and so they've effectively got 10%, but no one knows they're a substantial shareholder yet.
No, that's right.
So it's probably is that
very
so Perseus
similar
have
here.
had a 3.45% swap in place prior to this stake.
Yes, that's right.
Yeah.
So
they've been on the register effectively.
Yeah, so it's a super common way where you can sort of build a position in a stock a little bit more on the down low. So that's
covert op.
A bit of
Love
a covert op. And we'll get into that a little bit more later as well.
I think it was funny when I actually read that. What is a cash-settled equity swap? What the hell is that? But I just know it as swap.
Yeah.
They just say, we got them on swap.
Got them on swap.
It's like the desk.
That's what they say on the desk, man.
Yes.
You're all in on the lingo, Matty.
I fucking love it. Right, so what about... So we saw something very interesting yesterday afternoon, the execution of the block trade itself.
So,
this is cool.
Now, look, everyone's all had moments of stuffing shit up at the office. It always happens where no one's immune to it, but this was just a classic case of fat fingers on the keyboard, right?
This is a carton. This is what you define as that's a carton.
I think it's probably about 6 cartons, Matty. So not once, but twice. If you have a look at this, let's have a look at the first screenshot here. What do you see as the problem, Matty?
Okay, so that's Perseus, and so there's which is trading at $2.48, but then there's been an attempt to block trade 294 million shares at 21 cents.
Yep. And then the sort of
Perseus
further
shares.
one later. Now, obviously,
and they tried again. Then they tried 17.8 million at
that
21
didn't work.
cents again.
So they were quickly reversed.
Yeah,
so they quickly reversed them, thankfully, and then put them in the right company, which was Perseus acquiring Predictive shares, not Perseus buying Perseus. Yeah, anyway.
Predictive buying Perseus.
Oh, God, too many P's. So they got
That's
there
right,
in the end.
It was the P's.
It was the P's.
Probably buggered that person up. It's just too many P's.
Too many P's.
Oh, God, that would have been, imagine the yellings.
I'd be a bit scared, but so they got there eventually. The block trade got executed, and we saw very promptly after that the announcement come out on ASX about the strategic investment. But Matty,
but if you look into the weeds there, Ali, and I'm sure you did the digging, you can see that there was a bit of action going back a few months now, right?
No, that's right. So this is we'd seen sort of back in the appendix of the change of substantial holder notice, Perseus had been sort of buying small parcels of Predictive on market since, early April this year. But even prior to that, they'd been building their swap position from as early as September 23, sort of building that up sort of steadily till June of this year to where they've announced it at about 3.5%. They've got on swap of Predictive as well.
So who are they buying the shares off? Tell us about this character.
Okay.
This is interesting.
So there's again it's all the juicy stuff's in the appendices, Maddie and JD. So in that appendix, there's 3 sale agreements in there, and from what I can tell, those sale agreements and those terms are effectively, replicas of each other, as other than the sellers themselves. So the first one, we've got Jamie Boynton, 59 million shares of Predictive. BPM Investments, 28 million shares of Predictive, which Jamie is a sole beneficial owner of. And then you've got roughly 225 million Predictive shares held by Capital Limited. Jamie Boynton is the chair of Capital, which is they're a London-listed drilling company, around 350 million market cap. He is also a major shareholder, according to the last annual report, about 10% of Capital. And then as an aside, Jamie is also a substantial holder of Weir Gold. He holds just over 11%.
Jamie's got a bit going on.
He's got a bit going on. So with respect to the Capital component of this sale, he's recused himself from all dealings with those particular shares. So the board sort of dealt with that separately. But as far as his personal shares with in his own name and in BPM, he's essentially accepted the same terms as negotiated by Capital for those holdings. Looking at Capital, actually made an announcement around the sale of their PDI shares. They're sort of applying a lot of those proceeds to reduce debt levels and sort of recycle through the business. And Predictive is also a drilling client of Capital.
Oh, now this was the next bit was very interesting that I've never seen before in the sale agreement.
Yeah, so there's some interesting terms in there which I didn't think were super common until it was sort of pointed out to me a few other examples. But the key ones in there is there's a profit share. So I'm just going to call
like MMS.
Just like MMS. So I'm gonna group the three sellers into a group here just for the sake of explaining the term. So the sellers and Perseus have got a profit share arrangement whereby they will share 50-50 of the profit if Perseus sells any of the acquired shares in PDI to a third party, whether that's privately or as part of a third-party change of control transaction. And this sort of condition or clause is in place until the 31st of December next year. There's also a call option. And so if Perseus makes a takeover offer for Predictive prior to 31st December next year at a price greater than 21 cents, which is what they acquired the shares for, then the sellers can acquire back those shares they sold and accept the offer.
At the price they sold them for?
I think so, yes. And then or cancel the call option for a cash fee equal to the premium. So I think the way I understand that is essentially what this means is these sellers maintain some level of upside optionality in the event that Perseus or some other third-party deal occurs at higher than 21 cents by the end of next year.
Yeah, so they're like, right, if you want a strategic position in Predictive, the only way you're getting it is my shares, but it's on these conditions. If you sell them, I get half the profits, and if you take us over, I'm going to get the same upside as I would if I kept them.
Yeah.
Oh,
look at you, man.
Oh, Boynton, he's all over it. I like him. Take me out for dinner, Cobber. Yeah, interesting. Right. Bloody, Jesus Christ, GC, I can see why you friggin' needed to go for a walk earlier. You're going deep, Cobber.
Going deep.
So what's, Perseus, this has happened pretty quickly after the friggin' all-corp transaction.
No, that's right. And, as far as what it means for Perseus, if they wanted to go the full way, I mean, they've said actually what we should have sort of flagged early as well, that there's no, subject to the whole usual T's and C's, no current intention to, make a takeover offer for Predictive. They're not currently in discussions with the Predictive, all the rest of it. But should they want to go ahead and do that, I mean, Bankan sort of fits perfectly into that sort of Perseus targeted portfolio of, a 200,000 ounce plus producer, high margin asset in Africa. As we sort of touched on at the start, Perseus's focus for 25 and 26 would still be that, CMA underground at Yaouré and the construction of Nyanzaga, with first gold in 27. So, they've got plenty to keep them busy. But assuming, they did do a deal with Predictive, you could envisage, maybe a 28 or 29 sort of first gold for Bankan and, a production profile, approaching 750,000 ounces.
I think it's like it's first in the door at the moment. Like, I think there's a bit happening now. Everyone's like, right, companies are thinking everything's cheap enough to start getting a bit happening now. Look at what we talked about today.
No, 100%.
It's time in the market, GC.
It's time in the market.
I'm fired up.
And I mean, I think as far as, why they've structured it this way, and, perhaps they've learnt some lessons about the sort of the Silver Corp back and forth for All Corp, so sort of let's calling it doing a Ramelius, locking in a stake now, locking in their optionality now. There's absolutely no, as we've just said, they've got plenty going on in the next few years, so there's no need to rush to act now. They can take over Predictive if they want later when they're ready, or if someone else bids, they can make their life difficult to sell into their deal, outbid them. Whole raft of options it gives them, sort of approaching it in this way and in this structure as well.
What about for Predictive? Do you think it's positive or negative?
I think it's very positive. I mean, it just sort of the whole Perseus Predictive thing is not awfully new. People sort of pitched that idea multiple times, but it's sort of made that, a bit of a more, a bit more of reality now. I think it's honestly a matter of when, not if, for a Predictive takeover, whether it is Perseus, is logical. It could be someone else.
I think this does. The only negative is that it might be a disincentive. Is that a word? Disincentivized competitive tension. Got once they got the foot on it, it's like right. It might just deter other companies having a crack because they're like, fuck, we're going to waste all this time and Perseus have already got the stake and the power over it. So that's one there. So they're sort of bit from column A, bit from column B. But they're as you said, they're the logical company to take them anyway. So it's like if they could have sat there with no one going for them.
No, that's right. That's right. And I think the important thing of, or the more probably the interesting thing of why now, Bankan is still yet to receive its exploitation permit, which, like we said, we're expecting later this year. Perseus taking an interest in them now, sort of probably months before they're expecting this permit, surely indicates some level of confidence that that permitting will be received. I mean, I imagine Perseus would be pretty sensitive about geopolitical risk given what happened in Sudan last year. So they'd definitely be doing their homework, but still it's never a guarantee till the fat lady sings.
They're looking at the work they're doing is like, holy snap and duck shit, it can set them up for the future if they get this going, Nyanzaga going, in addition to their existing operations and diversifying themselves across Africa, making the plays now while the market's getting hated a bit, which is explorers and developers are getting hated, but that might start changing soon. So getting in now is probably a fucking good move.
Would you call it another counter-cyclical play, maybe?
Oh, it's counter-cyclical at record high gold prices, which is freaking weird.
Yeah. What do you reckon, JD?
Yeah. I think we might be stretching the counter-cyclical term, but you're dead right. The the junior end or the smaller end of the market's been beaten up. To your question, Matty, on do you think it's positive when you asked Ali before, you asked that question to the market out there, and you can see the answers are pretty emphatic. Yes, 18% up is the share price reaction today. That's, what does that add? Another 100 or so million onto the market cap. You can see people are pretty excited. And, I thought there would be a little bump. I'm surprised it's up kind of so much, given that, like you say, Ali, you don't know when it's going to happen. Is it going to be 6 months, 12 months, 2 years? But the conversation around Perseus has changed quite a bit now. I think it was only 6 odd months ago, Matty, we were chatting about Perseus and we were like, shit, this unfortunate stuff has played out in Sudan. What are they going to do for growth? Now, all of a sudden, they've got OreCorp, that's all gobbled up, that's done. And they've got their foot on another one. So the narrative has changed in, a relatively short amount of time.
Bloody good work, JD. Good work, GC. That was freaking in detail. I think did you get deep and you're like, shit, now I'm like, what have I done?
Now I've got to commit.
I've gone too far.
Oh, God. But I did come across actually one other point I'll just quickly mention before, as far as what it means for PDI. This is, again, super analogous to the OreCorp Nyanzaga example of, a single asset developer trying to, spend a lot of capex for what seems to be a great asset, but their market cap, is far less than that capex bill. So having that asset in the hands of someone like a Perseus, who could fund that out of, cash flows or debt or something, less dilutive than equity, is another positive point. But I'd like to close on a bit of a fun fact.
You beauty.
So this is an extract from a predictive announcement a couple months ago. Look who PDI appointed as their CEO, COO. Does the name look familiar?
OreCorp.
Who owns OreCorp now?
So it was.
Read into that what you may.
Oh.
But I thought that was a little interesting takeaway.
Oh, good work, GC.
Well done.
Good digging. Right, good work, team. Good. Hey, JD, we've got a rip snorter coming out tomorrow. JD's got hold of the ex-head of research and a previous director at Goldman Sachs.
Wow.
To come on and talk everything global energy. Won't give
in
away
the Big Apple.
From stateside.
That's it.
It's a friggin' rip snorter. Good stuff. And thanks to bloody Axis Mining Technology for servicing the whole world with drill hole survey instrumentation. Also, MMS, VRIFY, SMEC Power Technology, DSI Underground, Silverstone, CRE Insurance, Greenlands Equipment, K-Drill. It should be called K-Druba.
K-Druba.
K-Druba. And grab a spark chart while you're at it. Hootaroo, money miners.
Hootaroo, guys.
The information contained in this episode of Money of Mine is of general nature only and does not take into account the objectives, financial situation or needs of any particular person. Before making any investment decision, you should consult with your financial advisor and consider how appropriate the advice is to your objectives, financial situation and needs.